For Tracy Money Under Commentary, this is Owen Tracy recording. It's 3:19 p.m. that is Central Time. Today is January 23rd. Well, I thought we'd kick off with oil prices because President Trump was giving his presentation at the Davos summit in here today, and he wasn't there in person, but it was online, and he was very clear in stating that he wants oil prices lower, and so far the market is complying. I haven't seen any real statistics yet to suggest that there has been a major boost in production or that there has been a let up in OPEC's determination to withhold supply from the market. But nonetheless, the price has fallen about $5 in the last couple of weeks. So this is certainly emphasizing that there's resistance in the $80 area. Now, the next big question, of course, will be is how low is it going to go? $60 is about where half of the US production is economic. So does President Trump want the price to go below economic levels for the USA's producers? I think that's unlikely. But he would certainly be happy if oil prices complied with these wishes. And so far, so good on that front. Of course, what most people who buy or who are consumers will be paying attention to is what happens. And gasoline prices are also very clearly political because its voters are the ones that are paying attention and also pulling back from the region of the peaks put in back in October. Although this hasn't been an especially dynamic move either. We've just had incremental declines on a day-over-day basis. Now, other than that, when we look at the wider stock market environment, the majority of indices were in positive territory. The Dow was up about 400 points, the Nasdaq up about a fifth of a percent. Most European markets were in positive territory, and the best performers were Spain and the Swedish markets. The Japanese market was also a bit firmer here today, up about 0.8%. In China, we saw that there was some headlines to say that the government is encouraging investors to go in there and buy equities, particularly insurance companies, but that did not translate into a material jump in the domestic markets. Then, against a background where we have pretty firm action in stocks, the Indian market's underperformance is a bit of a standout. I think this is a direct repercussion of the RBI's efforts in the last 3 to 6 months to curtail speculative activity in the mid caps. Now it's translating into more of a correction in the wider market. So plenty to think about